Mortgage rates decided to jump back into the sevens this week. We can see the impact in that immediate sales are slowing down. These are the homes that go into contract immediately after a listing. We can see the new pending sales pace slow down and price reductions tick up. Maybe though the most notable thing in the data recently is that while home prices nationally are still up and holding a few percent higher than last year, home prices have started to decline in a couple of states, in particular Florida, with Arizona and Texas probably turning the corner as well. In these short weekly videos, we focus on the national trends. Once a month, though, we get to take a full hour to dive into the local markets and all the nuance in the data, all the leading indicators. In the June webinar, will be in 2 weeks on Thursday, the 20th of June. This month, we'll spend extra time investigating these local differences. What do we already know about the future of home prices in Florida and Texas? What about other states like South Carolina and Idaho? So there's a link to register for that webinar, the June webinar, in the description below. That's Thursday, June 20th at 10 a.m. Pacific. Click that link to save your spot and deep dive with us on all the data. Also, quick announcement that next week, this video will be taking a break. I'm getting married, so it'll be a busy weekend, a little bit of a busy weekend ahead for me. So no video next Monday, back the following week. I hate to skip a week in the data. The data can change so quickly, and I'm so often wrong with my expectations that it's valuable to keep a track every week on what the data is telling us. So we've done over 200 of these videos now and rarely skip a week. But you know, at Altos, we track all the pricing, all the supply and demand, all the sales, all the changes in that data so you can understand it immediately as it happens. So I'm Mike Simonsen. I'm the president of Altos Research, and let's look at the details of the U.S. real estate market as we roll into June 2024. So there are now 605,000 single-family homes on the market. Inventory continues to build each week as mortgage rates stay over 7%. Inventory rose by 1.7% this week, and there are now 39% more homes on the market now than last year at this time. 170,000 more single-family homes on the market across the country now than last year. That's a pretty big increase. A couple of key facts to note about the inventory increase. One, inventory is climbing everywhere. Every state has more homes for sale now than a year ago. Most of the country has over 30% more homes on the market, but a few states like Texas, California, Florida, Georgia, Arizona are driving the bulk of the inventory increases for the country. So inventory is up everywhere, just some places more than others. The other thing to keep in mind is what we've been talking about for a couple of years here. It is higher interest rates that lead to greater inventory. So last fall, we all assumed that mortgage rates would be declining by now, and had that happened, inventory would be down again. So I don't predict mortgage rates, but this trend of rising inventory will continue as long as rates stay elevated. That means by like next summer, if mortgage rates are still in the sevens or higher, we could finally be back to the old normal levels of unsold homes on the market. And you can see that taking shape in the inventory chart here. So by late summer, we'll have more than 700,000 homes on the market. And that'll feel like a lot compared to a couple of years ago. It is a lot compared to a couple of years ago, but it's still 30% fewer than we used to have. So see how the dark red line for this year is breaking towards that top group of pre-pandemic years? That's something to keep our eye on. Now, on the other hand, inventory can't build too much if sellers don't sell. And there are some signals of seller volume drying up. So there were only 63,000 new listings this week. That's down 12% on the week, which included the Memorial Day holiday. Every year has a dip in activity for the holiday. But I think it's notable that the holiday week dipped lower than any other year except last year. So seller volume in 2024 had been growing slowly, and I viewed that as an optimistic trend, but the seller pace seems to have lost much of its momentum. Still, 15% more new listings unsold than last year, so there's inventory growth there. And there were fewer immediate sales happening now as well. So only 17% of the new listings went immediately into contract this week. Of the 76,000 new listings total, 13,000 of those are already in contract. That rate has been dropping all month. The 17% is significantly fewer than last year at this time, or 2022, when the market was changing so dramatically. So overall, there were 10% more total sellers now than in 2023 at this time. If we look at the trajectory of the new listings data in this chart here, you can see that the growth, the pace has leveled off. If the new listings rate starts to recede and look like last year's pace, that would be one limiter on how much inventory can grow. We will have big inventory gains for the next 4 weeks, then a breather for Independence Day, then another bump in July before tapering off late in the summer. So we're currently modeling inventory to peak in October, and that model is very interest rate sensitive. If rates are climbing late in the year, inventory will climb then too. If rates fall before then, inventory would turn down earlier in the summer. We are currently expecting to end the year at about 625,000 single-family homes on the market, which would be 19% more than a year prior. That's a pretty hefty growth and could skew even higher if rates continue to defy gravity. On to the pending sales data. There are 406,000 single-family homes in contract. That's just 1% more than a year ago. There were 63,000 new contracts pending for this holiday week this year. That's a drop of 8% from last week, given the holiday. 63,000 is just 1% more than last year at this time. So any of the growth in the home sales really kind of feels like it has evaporated. So also the pending sales count will typically start declining in mid-June as the market shifts from the spring season to the summer. So we're probably at the peak of the sales now. The pending sales have really lost any momentum they had this spring. So this chart is of the weekly new contracts pending. This is the count of all the single-family homes that go from listed, take offers, and go into the sales process in a given week. And you can see how that dark red line from this year has been above last year, slightly more sales, but recently now is just barely above. So that sales growth has evaporated. The sales pace will pick up if rates happen to drop notably in the quarter, though it's impossible to know if rates will climb or fall in the next few months. So we'll just keep our eyes on the pending sales data to watch the impact. So supply is up, transaction volume is sliding. I gotta imagine that we will see sales prices notch down in the second half of the year. The median price of all the single-family homes in the U.S. now is $453,500. If you're shopping for a house today, that's what your selection is. That ticked down from last week and is not even 1% above last year or even 2 years ago. The annualized home price gains have come down from where 2023 ended. So the headlines tend to focus on sales prices, and the earliest proxy for sales happens with the contracts pending. And to be clear, the weekly price measure for the new contracts, the new pending properties across the country, is actually still coming in about 5% greater than last year. These are the final asking prices of all the homes that go into contract. This is what people are buying and where they're buying it. These homes are not yet sold. And they'll take a month or so in contract. So the median price of this measure stands currently at $399,000. So that's been bouncing 3 to 5% above last year. And since the leading indicators for home sales prices have been softening for a while now, we expect to see this proxy for sales prices to recede lower soon. And in fact, when we look at the state level, Florida and Arizona pending sales prices are down from April. These are the first two states to turn lower this year. Texas is probably at that point as well. In parts of that state, like Austin, home prices are still plenty below the 2022 peak. So we've been talking about cooling signals for home prices for a bunch of weeks now in these videos, and you can actually start to see it in a couple states. And at Altos, we don't seasonally adjust the data. So it's notable that these markets have ticked down in the second quarter when home prices normally rise. When looking at national prices, since supply is greater everywhere, and since the other leading indicators of sales prices are softer, we expect the national pricing indicators to ease lower too in the coming months. That means from 6% gains at the start of the year to 4% now to closer to 0% flat year-over-year home price gains for the country. We don't yet have any data that shows home prices will decline nationally. There's no data that says that, but the annualized gains will probably disappear. Looking at the price reductions data set, I don't get any more sanguine. It all fits the same pattern of increasing supply and home buyer demand that is just exhausted by higher mortgage rates. So this week now, 35.1% of the homes on the market have felt the need to reduce their asking price from the original list. This is 30 basis points more than last week and a pretty sizable jump over a year ago. So as a rule of thumb, it is normal for about a third of homes to take a price cut before they sell. Sometimes this is intentional, sometimes not. But about a third overprice a listing and then take a price cut before they sell. As home sellers are faced with less demand than they expected, more of them have to reduce their prices. And so price reductions now nationally are reaching the upper 30s. That's sort of a bearish indicator for future sales prices. In the price reductions chart here, focus on the light red line from 2022. As price cuts accelerated all that year, that led to annualized sale price declines in the spring of 23. So you can see there's like a 6 or 8 month lead time in the price reductions stat after the price reduction stat starts climbing. So now there are some parts of the country, New England in particular, with still pretty tight inventory and still relatively few price cuts. Supply is more balanced with current levels of demand in some of these regions. So that may keep a lid on this stat as we look at the national levels later this year. That is, these changes are playing out at the local and regional levels, not yet nationally. And that's why we do this work each week. Home buyers are obviously sensitive to the cost of money. Mortgage rates have stayed higher for longer than anyone anticipated this year. They haven't come down yet. So what if they do? If you aren't watching this data each week, you're probably behind the curve. You have buyers and sellers who have no idea how this market is changing right now, and they need to hear the data from you. So you should join us at Altos Research. Go to altosresearch.com and book a free consult with our team. We will help you know how to talk about the market with your clients and prospects today. There's a link in the description below to join us. Click that and let's get started. We'll be back in 2 weeks.